Good morning, traders. It is 9:52 a.m., November 16th. It's a Monday. And this is actually going to be my 100 subscriber video, even though I'm not quite there yet. I'm just kind of making it preemptively because I have a little bit of time right now. And I just made a video and uploaded one about a live trade that I took at the open. You can see it right here. So I've already got everything set up to make the video. So I figured might as well make it and have it ready. So first, I just want to say thanks to everyone who's been subscribing and who's been commenting and liking the videos. I really appreciate it. From new, like beginner traders, people that are trying to learn, and also like fellow traders that have their own channels. It's really nice to hear from everybody, good or bad. So let's keep that up. And then, just if you're new to this channel, this is basically a channel based on day trading with Webull, right? But you can apply this really to any platform, especially free brokers, because my style, one of the things that I use to my advantage is the fact that I'm trading with a commission-free platform. So I do things and I trade in a certain way that wouldn't necessarily work if you were trading with like a Lightspeed or something like that charges commissions and that charges fees every time you take a trade. Although you can, learn from what I'm doing and apply it to that, you just have to do it kind of with, I guess, larger share size, because my account is very small. I'm trading with about $150, just trying to test out my strategy and get it going. I track everything in an Excel spreadsheet here, and I started trading this strategy at the very beginning of it was at the end of October, and I was still ironing out a lot of kinks, and you can see that, is reflected. Also, this was like the week before elections, and this was the week of elections. So between, me getting used to the strategy and ironing the bugs out, then you also have the election turmoil going on. And this was the previous week, all green for the week. I had a couple of losing trades, but all green for the week. It was my biggest week so far trading this plan. And again, that doesn't look like much, but I'm only trading, this is my account size right here. This is my account total for day trading. And I only trade with 1/3 of that every single day at the most. So there's some days where I don't take 3 trades. So I'm only trading with like 1/9 of it, I guess. So anyway, so that amounts to about maybe $15 at the most per trade. So if you see a trade around like with a 15-cent return, that's a 1% return on my trade. So, that's pretty much my goal with every trade, is to get about 1%. And if I can get more than that, great. If I get less than that or I lose a little bit, hey, that's trading. So this is the way I track it with my spreadsheet. And I don't show you guys like my account page on Webull that much, because I've got some long-term positions that I'm holding. They're not like bag holding. They're stocks that I bought that I meant to hold long-term, like this Dollar General stock and this ETF that follows the market. So those are long-term. So those kind of really screw up this chart. When they fluctuate, it looks like I could have like a really big loss. Or like today I only made 12 cents, but it looks like I made $1.55, and that's because right now, these have gone up since Friday. So anyway, yeah, you guys, I don't really show you that page and this page very much because it's just not it's not accurate. Like this is my month of November. It looks like I'm up $12, but I'm not. I'm up $2.61 for the month. So that's how I'm transparent with you guys. I'm not going to show you this page while I'm holding those stocks, and I don't really plan to sell those. I might move them to another account in the future if I keep this up, because then I can keep this a little cleaner, without these long-term holds. But I'm not really worried about that yet. So anyway, the big reason for this video was to share my trading plan with you guys. And this is already going to be a long video, I can tell, because, I'm introducing new viewers and things like that. We're already almost up to 5 minutes. So I'm just going to take the rest of the video and kind of quickly give you a broad view of my trading plan. And then you guys can ask me questions in the comment section below, and either I'll answer them directly, or if they're, worthy of making a video, I'll make a separate video with greater detail about my trading plan. And so this is my trading plan that I've been trading since like the end of October, but I modify it every time, I see a weakness or I see like mistakes that I'm making that could be prevented by adjusting the plan. So we're not going to read all of this, but I'm just going to go through the highlights. Now, the most important thing about your trading plan is to read it every single day before you trade. And the reason why that is when you get into a trade, the prices are jumping around like crazy and you don't know what to do. And you're just, kind of a deer in the headlights watching. It's not so bad right now because now we're like a half hour into the open. But these stocks, if you watch my video from earlier today, you'll see the trade that I took at the open. The stocks were moving very wildly, or the one that I was in was moving extremely wildly, which they always do. So in order for you to know what to do when that happens, you have to have not only a good trading plan, but you have to have it embedded in your mind and ready to access in these crazy high stress, high speed moments that the market open gives you. So that's why I say read it every single day. Now, so this plan, I'm going to do like, I guess, a big update every month, but I do tweak it during the month. And the main idea behind this plan, and this is the thing that has, I think, really made my month, is the reason why I'm not in the red this month, is that, and I have, I've been in the green before many months. I've had like, my first month was red, then 2 months in the green consecutively, and then I think 2 red months, and now on this month. So, I've been kind of bouncing around, but I knew like what was happening before wasn't really sustainable. So that's why I came up with this plan. It's much stricter, and I think, it'll protect my money and allow me to take profits when I'm in a winning trade. So anyway, the main idea is to take 1 trade per market session, and that means that if you're in the pre-market, you can get 1 trade. So, for example, like this gray area here on the 1-minute chart, this shows you the pre-market, and it's from 4 a.m. till 9:30 a.m. So I could take a trade anytime in that time frame, but only 1 trade. And no matter what, like win or lose, or if I got a bad entry or something happened and didn't go quite right, I can't take another trade. I have broken that rule once or twice this month, but it's been a while. And both times I, took a day off or, I punished myself somehow to try to avoid breaking that rule, because it's really important that we stick to our plan and follow our rules. Now, and then the other, obviously you can take 1 trade during the market open and then 1 trade in the aftermarket, which is from 4 to 8 p.m. So that's the 1 trade. So the most I can take is 3 trades in the day, the whole day, including extended hours. And if, say, I skip a session where I don't trade, then I can't apply that trade to a later session, because the main reason why I'm doing that is one of the most difficult things when you're day trading is trading with emotion and revenge trading and FOMO trading. If you don't know what that stuff is, look it up. But if you've been trading at all, I'm sure you already know what it is. And by trading 1 trade per session, that avoids all of those problems, because my trade, win or lose, once I'm out of it, I'm done, and I can't go, oh man, I could have gotten this or that or whatever. Let me get back in here. Maybe I can recoup that loss. Maybe I can make this red day a green day. That's the stuff that gets you into trouble. It almost always turns a red day into a redder day. Or you end up bag holding, which is really, really bad. That's something I've almost never done. I think I've done it once or twice since I started trading, and that's always a bad idea. Okay, so that goes over the main idea behind the plan. Again, I'm not going to go through everything in detail. But the other thing is that's really important is that I'm only trading with 10% of my buying power. That means that not my whole account, but this right here, because the whole account value includes those stocks that I'm holding long-term as investments. So anyway, it's 10% of this amount. So right now, 10% would be $15.28. And you can see that on my trade page that I have my hot buttons and hotkeys set up to buy 10%. And I do that for every single trade, no matter what. I don't try and say, well, this setup's a little better than the other one. Let me go to 20%, or this setup is weaker than the previous. Let me do 5%. I used to do that. It doesn't work out. You're going to really screw up your account. Your wins and losses are just going to be way out of whack, and you're going to end up losing money. By keeping every single trade roughly the same amount of money, you are going to always be risking the same amount. And, you know, like, for example, if I bought 10% of a stock that was $1.50, I would get about 10 shares, right? And if I bought 10% of a stock, 10% of my buying power of a stock that was $7.50, I would get 2 shares. So, you know, the amount that price is going to fluctuate, it's not going to hurt me. Like, you know, if I bought, say, 10 shares of that $7.50 stock. So hopefully that makes sense. So yeah, that's a strong recommendation. And then also, like I said before, I only take 3 trades a day. So that's only like 30% of that buying power per day. Now with a cash account, you have to wait 2 days for the funds to settle. So like whatever I traded with today in the pre-market and Friday, that's this unsettled cash. So that will not be back in or I should say a portion of that will be back in my account tomorrow, but the stuff that I trade with today will still be in here in unsettled cash until Wednesday. So you have to keep all of that stuff in mind when you're trading with a small cash account. Otherwise, you're not going to have money to trade with. I also really like having some cash in there to trade each session, the pre-market, the intraday, and the aftermarket, because there's a lot of opportunities that happen in the aftermarket, like right when the bell closes, that you would miss out on if you didn't have cash available in the account. So all that stuff right here kind of helps keep that happening. And then, so like you see, like in the beginning, I just have like a bunch of paragraphs, and these are kind of like big key ideas that are part of the plan. So the main thing that I'm looking for are top gainers with big volume, ideally at the beginning of their move upward. That way they can keep going up. They're less likely to sell off. Check the daily chart before entering. That's super important. You know, again, I could go into lots of detail on these. I'm not going to in this video. But if you don't understand what that means, ask me below, or I'll make a separate video about it eventually. This is really important. If your first order execution fails, don't try to put in another one if the stock pops without you. That means if the price, you know, you're trying to catch a breakout and you put in an order and it doesn't get filled for whatever reason, and then there goes that breakout, you really shouldn't try to catch it or chase it, because chances are it's going to pull back on you and you're going to end up in a big loss, plus your position's going to be much higher. So that's why that's there. So this is where really the plan starts, conditions to take a trade. This is like a key thing I put here right at the beginning because it's so important and it's messed me up before, is I want to make sure that I know and I'm conscious of my stop loss before I enter the trade, whether it be saying, okay, it's the bottom of this candle or this price or whatever. I have to know exactly where my stop loss is before I enter. Otherwise, if I get in and the price jumps around and jumps below my entry, I might be liable to hold the stock longer because I'm like, wait, where's my stop? Where am I supposed to stop out? And before you know it, you know, you've taken a huge hit. So you got to know right away where your stop is before you enter the trade. This is just because right now I'm trading with about $15, a little bit more now. So I need to be able to scale out, which means that I sell partial shares when the stock gives me some profit. And that's why that price is there. And then let's see, pre-aftermarket, 1 trade per session. We talked about that. Never buy when you see dashed candles. That's a volume thing. And then this is more about volume. And I do take trades sometimes even as early at 4 a.m., but they have to have a lot of volume. And I talk about that here. Of course, you can pause this and read everything very carefully. So these are actually my conditions and my rules. This is my actual plan to be taking a trade, at least in the pre-market and aftermarket. Now, whenever you see stuff like highlighted or in bold or red bold, it's really important, and it's something that's either cost me money because I didn't do it, or it's made me a lot of money because I did do it, so I don't want to forget about it. Yeah, and this is something, I don't have a chart for it, but it's basically the opposite of what this is. When you get like one huge green candle and then the price kind of chops around like that. That's what I'm trying to say to avoid here. And then this is the stuff that I actually am looking for. Stocks that run up with nice clean price action. They have a little pullback, and then I can get in, to catch the second run up. And then these are like details about the steps and the entries and all that kind of stuff. Hopefully you can see that. If not, I'll do this again and zoom in on it some other time when I go into more detail. So now that's for pre-market trading and aftermarket trading. This is trading the market open. So this was a note that I wrote for myself a few days ago, probably, or maybe a week ago. Stop trading the first 1 minute candle. So that was really about, and I actually did trade the first 1 minute candle today, but there's a little bit more detail behind that this doesn't tell you. Is before, what I used to do is say at 9:29 I would have an order in, a stop limit order, to catch a breakout at the open. And a lot of times what would happen is right at the open, like in the first few seconds, the price would pop up and then it would come back down and the trade would lose. Today, if you watch the video that I uploaded today that was trading ATHE, the stock flushed down at the open, but then it started to come back up very strongly. So then I went in and put an order after that, showed that strength, to a stop limit order to catch that strength or price increase back up. And just watch the video, you'll see exactly what I'm talking about. So technically that was a trade on the first 1 minute candle, but this really means like don't put in the order before the market opens and try to catch the breakout as the market opens. That's what that's about. Let's see. Yeah, and this probably kind of tells you that here. So you guys can read that. Again, really pay attention to bold stuff and highlighted stuff. So then I have another little chart example. I'm trying to like add charts to this thing as I go. So this is one. Here's like a really great breakout. That's the 929 candle, and you see the top of it, and you can see how the candle at open just shot up. Is this the same one? No, this is a different one. Yeah, so this is another one I traded the other day, and I have a video on it. Let's see. So then I have my conditions to sell, right? So, and the main idea, which is easier said than done, is to let winners run and get out of losers fast. But I have a lot of rules that help me get out of the losers fast. I'm still having a little trouble letting the winners run, but we'll get into that. So I'll let you guys read through all this stuff. I'm just going to focus on kind of the highlights, and again, you can let me know if you have any questions about anything here. Now, this is really where your money is made and lost in your trading plan, is your rules. The rules are the most important thing. Obviously, you have to have like instructions on, how to trade, but this stuff is all, probably going to change, and it depends on your trading style. But the rules are really hard and fast, and you should really stick to them and never break them. And if they're highlighted or they're in red, again, they're because either, it's something I used to do and it lost me a lot of money, or, it's something that I could see is going to make me a lot of money if I follow it. So anyway, I just want to talk about this very first one because it's something a lot of new traders do, and some people even encourage it, and it's a really, really bad idea, and it's to never average down. And you can see right here, if you think about averaging down, it means you're in a losing trade and you should just sell your position. And that's pretty true. Of course, any trade, the price could come back later in the day or days down the road if you're bag holding, and you might sell for break even. You might even make a profit, but that is such a bad habit to get into, and you'll realize it the very first time you do it, what a terrible thing it is. The reason why I have that as my number one rule is because there was a time months ago when I was a much newer trader where I was doing that, especially in the pre-market. I would catch these stocks that are running up, kind of like the charts that I showed you, and then I would try to buy them during the pullback while it was dipping, and then I would say, okay, well, if it keeps dipping, I'll just average down and get a lower average price, and then when it goes back up, I'll sell for a nice profit. And the unfortunate thing, and this happens a lot in the stock market, is I was getting away with that almost all week, the week that I was doing it really badly. I had about 4 or 5 winning trades doing that, and then on that Friday, I did the same thing again in the pre-market. and I ended up holding the bag, and I've never held a bag before, and I don't think I have since. I definitely haven't since. And the reason why was because I had averaged down so many times. Now I'm feeling like, oh, wow, I can't afford, to take this loss. These are all like the dumbest things you could ever think of. But that's what happens when you average down. You just further and further invest yourself in this position and this stock, this really garbage stock that you're just trying to day trade and get a little bit of profit from. It's not something you want to be holding. So that's what happened. And I basically ended up holding this thing over the weekend. And then I got up at 4 a.m. on Monday and started selling out. Luckily, the price came up a little bit, but it was still way below my position, and I took a loss on it. But, huge lesson learned. That was when I made the rule never average down. And I've only done it maybe once or twice since then, but it's been a very long time. And each time I did it, I punished myself, by taking a day off. So it's just a really, really bad thing to do. That's the number one rule. Definitely go through and read through all of my rules and make sure that you understand them. And if you don't, ask me questions below. There's a very good reason why I have each one of these rules here. And they're pretty much in order of importance, more or less. And I add to them regularly if I see something, that I do that could have been avoided. If there was like a pattern that was obvious and I didn't see it, or, just some behavior or something that I did that I know I shouldn't have done, then I put a rule in, and then I have to read it every day, and it gets stuck in my head, and it helps me avoid making those mistakes in the future. So then, again, hopefully you see a lot of redundancy in the plan, and that's there for a reason. Like you want to repeat yourself in your plan. You want to kind of say the same thing like 3 different times because you want it to stick. You want there to be no doubt, what am I supposed to do when this happens or that happens or whatever? Do I get in? Do I get out? Do I stay? Whatever. So anyway, that's my trading plan. Hopefully I didn't talk too much. I tried to just go over the main points, but still really long video here, 20 minutes. Hopefully you got something out of it. Let me know in the comments below, and anything that you would like me to go into more detail about, I'd be happy to. And hopefully this helps you come up with your own plan, really, because this is the plan that works for me. It's not necessarily going to work for everyone or even most traders. So the plans are very specific to the trader, and you have to spend some time and learn what type of trader you want to be, and then the things you're comfortable doing, your risk management, your risk tolerance, and build your plan around that, and the types of stocks you trade. I trade low price, low float, like 100 million float shares or less type of stock, and that's a very different style than if you're trading mid caps or large caps. So keep all that stuff in mind, and I hope this helps. Let me know, and please leave a like and thumbs up and share and subscribe and all that stuff if you haven't already. Look forward to making more videos for you guys. Take care.